Hello, I'm George Alfredas.
And I'm Dave Mathews, and this is What's Next Wall Street.
This is a show about winning trades.
We want to help you learn about trading in a fun, entertaining, and most importantly, a useful way.
That's right. We're going to talk about all the hot new trending products and services that you'll not only want to buy, but if you're like us, you'll want to invest in them too.
We'll also cover the fundamentals of those companies to make you an informed trader and make it easier to target investment potential. Plus, we'll share our thoughts on where the charts and indicators say a particular stock is going.
All this info can help you create a tailored trade plan and help you stay up to speed on what's next Wall Street so that all you got to do is stack your gains. You usually say it with me, but you're off.
I wasn't feeling it today, but you can email us, those of you at home, over at the OptionsPlayers.com website, or hit us up on those social medias, What's Next Wall Street, with your questions. We can also direct you to instructors and experts over at Options Players who dig into those funky fundamentals.
Yes, absolutely. So here's the thing. You can watch this episode on the Options Players YouTube channel or listen to the podcast on Apple, Spotify, or wherever you get your podcasts.
And you know what, Georgia? Today is very special.
It's so special.
We have the Options Players lead instructor, Mr. Greg House. Kraus in the house. Kraus in the house, that's what I wanted to say.
Yes.
Greg, welcome.
Hi, thank you. Thank you for having me.
We're happy to have you here. Did anything particular bring you to Dallas?
Yeah, it's some Pokemon, vintage Pokemon cards I had to sell.
Stack
So
some Pokemon gains.
had to make some gains on those.
Okay.
You know.
So, Greg, we always say, hey, we've got Greg, lead instructor at Options Players here. So when you say you're lead instructor, does that mean you lead everybody else, or are you like an instructor? Tell me what that means. What do you do?
That's a good question. I didn't give myself that name. I don't think I'm the lead instructor. We have instructors that all focus on their own thing. I would ask, the owner why he put that in there. But I do.
Well,
I've been doing this for a long time.
We'll ask the teleprompter guy.
Yeah,
because
teleprompter guy. What does he do? but so your classes, what do you teach in your classes?
So my main class is going to be scalping. So we focus on technical analysis, although that's not my real background, what I really trade all the time, but I do algorithm trading and things on my own. So we teach what I call the sauce, which is what my algorithm runs off of, which is a momentum TA trading. So we want to focus on that, but it's more focused on getting the momentum and learning risk to reward and then focusing on that. So it's not just, it did this trade. You have to actually think a little bit to actually trade it off.
So that's when we say digging into those fundamentals.
I get it. Here's the other thing. Whenever we ask him something, it's like, you know it. Like, you know, do you just do tons of research? Is that like your thing?
I don't even look at the script. Y'all just ask the question and I just answer it.
Oh, okay. Well, all right.
All right.
Okay.
Sometimes I'll read it right before, but
But why?
Does
Is that because you do a lot of research? Why do you just know all this stuff?
I've instructed at multiple colleges I have my MBA, so I do teach some marketing, some business, and my background is in corporate finance. So that kind of helps me. Most of the things you're talking about are going to relate to corporate finance or some form of marketing or something like that. So,
and we follow timely events on the show too, right?
Yes.
So obviously if the stuff's in the news, Greg's tracking that stuff
and then
every day.
Over at OptionPlayers.com, we have everybody already talking about most of these current events that you're talking about.
And there's a chat, several chats,
in the
right?
chat room. So normally, that's already been discussed, and someone's either asked me, Steve, or one of the other instructors the same question. So sometimes it's kind of redundant, and I probably answered it 55 times in the last week or so. So often that's how the new news goes. So it's in the Option Players.
Well, we're
chats.
lucky. We've got Greg here for the next 3 weeks. So let's get on with it.
All right, let's get on with it. Okay, so I feel like we talk about oil all the time. It's like every week.
Missed the bumper.
Oh, okay, sorry.
I'll pick it up right.
Okay. Okay, Steve, will you scoot it up though? Because I don't need to see the bumper where it says down
Where
to
she
segment
starts.
where I start talking. I know, but just tell me where to talk. I'm just going to talk. Okay, so I'm glad Greg is here. I feel like we talk about oil every week. Like last week, we were pondering the surge and whether it would continue. This week, we don't even have to ask. The heads of BP America, Chevron, ExxonMobil, and Shell testified before Congress recently and admitted that their industry has indeed contributed to climate change. However, They denied engaging in disinformation in a campaign for disinformation. Democrats on the panel accused them of a decades-long disinformation campaign about their company's roles in causing global warming. Committee Chairwoman Carolyn Maloney went a step further and said the industry ran a coordinated campaign to mislead the public, to hide the dangers of their own product, and to derail global efforts to reduce greenhouse emissions. Ouch, like, whoa.
Yeah, that's not even including the scandals the automotive manufacturers did.
Okay.
Meanwhile, gas prices are continuing to rise, especially in Southern California. The Auto Club says Los Angeles County drivers are currently paying an average of $4.55 for a gallon of gas.
Gotta get on the
That's
bus.
an increase of $1.37 over last year's average in LA County. What's to blame? Well, you already know. It's the public being tired of trapped in their own damn homes.
Yes, we're tired of it.
High crude oil prices are causing Southland gas prices to rise since their highest level, though, since 2012.
So you know what this does? It kind of makes you want an electric vehicle, right?
No.
I actually have that new fully electric Hummer on my Christmas list. It's in the Neiman Marcus catalog, which I meant to bring in the Neiman Marcus Christmas catalog, but it's $285,000, and I just don't see Santa dropping that down the chimney this year. But a girl can dream, can't she? I could at least try a Tesla. Well, that's another story. But I could try for a couple of days since Hertz just committed to 100,000 of them. Of course, Tesla just hit the trillion in market cap and now sits alongside fellow trillion-dollar companies Apple, Microsoft, Alphabet, and Amazon.
Now, wait a minute.
What?
So Elon, through his Twitter account, said that the Hertz deal wasn't even a purchase order, and that got the shorts fired up, which in turn dropped the price of the stock. It was further down as we shoot this. He said, if any of this is based on Hertz, I'd like to emphasize that no contract has been signed yet. But Tesla, he continues, has far more demand than production, therefore will only sell cars to Hertz for the same margin as to consumers. Now, we all know Elon enjoys playing with the bears who don't believe in the stock, and this is probably another instance where he anticipates an opportunity to cause another short squeeze and drive them out. And we actually like that he's not discounting the cars he sells. Unlike the former parent of Hertz, Ford, they used to buy them at discounts. Now, you can find the bankrupt rental car company shares under the NASDAQ sticker HTZ. Now, the next day after these tweets, I got an email from my Hertz Gold account saying I could rent a Tesla. I mean, we can't make this stuff up. Meanwhile, Elon's very outspoken about a proposal by Oregon Senator Ron Wyden to tax unrealized gains on publicly traded assets for some of the wealthiest Americans.
Yeah.
This proposal could essentially close this tax loophole that allows billionaires and one particularly outspoken trillionaire to defer capital gains taxes, yet still borrow against those gains. So if assets increase in value, that billionaire would have to pay taxes on the gain.
Okay, so with that said, this is why I'm confused as to why Elon would tweet out that poll asking his followers if he should sell 10% of his stock in Tesla, about $25 billion, by the way, to pay more tax. Elon promised that he would abide by the results of the poll. Well, 57% of his 3.5 million followers voted yes, because duh, Elon, most of your followers are not billionaires or even millionaires or even 100,000-aires. So I'm not sure why you thought they were going to side with you. Elon tweeted that he doesn't take cash or salary or a bonus, and that he only has stock, and it's the only way for him to pay taxes. And in reply, social media ate him alive and left no crumbs. Okay, it was the best. I mean, if you look at some of these comments, oh my gosh, they had me cracking up. They were just going in on poor Elon, and I just don't think he expected that.
Yeah, you know, this rumor has it was to pay back an $83 million loan that he took out. But what bank would not loan him a 0% money on anything to pay his taxes against those securities? Now, on top of that, they recently had to pull back the latest version of their full self-driving beta software less than a day after releasing it. This after drivers complained about false collision warnings and other problems. Not a good thing to have. The setback comes as regulators are taking a close look at the safety of Tesla's semi-autonomous driving technology, which the company calls, because nerds love acronyms, FSD. Now, all this is happening right as Walmart, of all places, got the approval for self-driving delivery vehicles. All this in their home state of Arkansas through a partnership from Gatik. Now, until now, every self-driving project required a human with their hands on the wheel or in an immediate standby mode. Now, thanks to Walmart, we're at full autonomy years before most experts, like me, even predicted it.
And there's even more competition as Rivian, which makes electric SUVs, pickup trucks, and commercial vans, completed its IPO. Rivian is also making delivery vehicles for Amazon, who was one of a dozen investors who backed their private offering to the tune of $10 billion, Dave.
Yeah, congratulations on that IPO, Rivian. You can find their ticker on the NASDAQ at RIVN. Now, they debuted at $78 a share. They made it as high as $119, and then they settled out at $100 on their opening day. So
Wow.
It was a world record for an IPO. So congrats.
Fantastic. Cool. Greg, since you're here, we want to pick your brain.
Okay.
Okay. What are your thoughts on all of this? Like, what? I mean,
Man, you just talked about 30 things.
I know.
All right,
Just pick one.
Let
Let's
me
talk about
get
self-driving, or not self-driving. Let's talk about the
Self-driving.
electric cars, rather.
Okay.
Because all the consumer cars, Mercedes, everybody's going electric.
everyone.
BMW's done it. They put their toe in the water with their i-Series. But now Rivian, a brand new hot stock to track, is the market too flooded?
Yes and no. Fundamentally, is Tesla worth what its value is? Absolutely not. It's not even worth a tenth of that in any metric. But the problem is, and even some of the older stockbrokers or analysts that say that, hey, it's not worth that. This is a new market. You have all these millennials that are just pushing the little meme market or whatever you want to call it. So the historical trend of how automakers, it's out the window. Right. So as
There's
you said,
no such thing as the past, which was race on Sunday, sell on Monday.
yeah, it's
Right.
just everyone's buying Tesla because they want Tesla. When would they sell it? I don't know. It could be when you start taxing unrealized gains. Okay. I think it's amazing. Taxes, I'll talk to y'all offline a little bit different, but taxes, I love taxes. It's just weird. People like to talk about it. So if you're out there, you probably have an opinion on taxes. So I'm going to ask you a question. Do you know what type of steel this is made of?
That would be.
He will.
That would be
All right.
rolled,
So I just
rolled
need to
steel.
know yes, no, or I don't know.
I don't know.
Okay. That's a good answer. Can your body digest
Gluten.
10 milligrams of gluten?
Yes.
Yes, no, or I don't
don't
know.
know.
I don't know. Are taxes, do rich need to pay more taxes?
Yes.
Yes, no, or I don't know.
Yes.
Yes. Okay. So you know more about taxes than you do this metal or anything else. Now, taxes, you have to understand economy, human behavior, all the tax codes, right? Let me tell you right now, people, you don't know the tax codes unless you're a CPA or you have some form of accounting degree or you're doing it. So it's just that one thing everybody has an opinion on, but they have no idea how it really works, right?
Okay.
I'm just saying, I'm serious.
No, I have no
So-
idea how it works, but I'm not going to feel sorry for a trillionaire who has
I'm not
to.
feeling sorry for them, but what effects will that have on other individuals? So if he sells those shares, how is that going to roll down to us, right? Because now if he sells 25 or 10% of his shares, which comes out to be about 2.5%, which isn't a lot, but that's a lot of float. If he sells that, someone
That's
has to buy
2.5%
it.
of the overall company.
Yeah,
Right.
that's a lot.
And the
right?
market, the Tesla went down significantly in the last 2 days, and we're wondering if it's because of that or the full self-driving. I think it's.
But that's just him. Now think about it over everyone. Now, if you just do this, you're also going to have to do that to other individuals. Cryptocurrency. You're not just how many billionaires have been made from crypto?
Right.
All those people that have been holding Bitcoin, those diamond hands. Guess what? You ain't got diamond hands now because you're going to have to sell that to pay your taxes. So people don't understand what deferred taxes are or what unrealized or recognized taxes are. Recognized means you paid them, okay? Realized means
Those are the only
you're
ones
about
I
to
know
have to be
about
paid
because
them,
I have to
okay?
pay mine. All I know about is
So
recognized.
that's a huge thing that I like to talk about, and it's just weird that everybody has such a strong opinion, but they absolutely know nothing.
Yeah, I think we all have a strong opinion because no matter how much we make, we all pay them, and we all think we
all
pay too
pay
much.
it.
No
And
matter
then-
how much you pay,
And do the rich
it's
pay
too
their
much.
fair share? I mean, statistically, yes, they pay more than anyone by far. Okay, but then you also have to. How do they make it? Okay, how do they get theirs lower? Through assets or through stocks. So how does a corporation? So I make $100,000 in my job. Okay, I pay my income tax in that. Say my average income, I pay 15% in my effective tax rate. So I've already paid 15%. Now I'll put that money into a corporation, a stock. That stock pays taxes, corporate tax. Then when I want to sell my stock, I have to pay tax again. So it's not just, oh, those rich people only paid this. The corporation also paid the tax, and then I paid the tax on the money I put in. So those individuals like, he only paid this. He did, but he also paid it through the corporation and through something else. So, and then depending on how the corporation is, that's called double taxation. It can be triple taxation through multiple corporations or subsidiaries.
But you can keep this in a crypto trading account if you don't realize the money, if you keep trading other currencies, or even keep it in a stable coin. You won't be taxed on each of those trades. Now.
But let's just say if you're considered so when we look at it, we call it cash to market, or there's other ways to look at it. Mm-hmm. So say you own cash or currency or a Forex. And at the end of the year, when the year is up, you recognize gains right then, or you realize gains then, you'll recognize when you pay them. So is that what's going to happen to crypto? So in January, it's going to be cash to market. So cash market is like every day, but let's just say it's at the end of the year, and that's what they do. So if you made $100,000, guess what? You owe taxes on that $100,000 when the tax bill comes April, 11th, right? So what's that going to do to crypto? That puts a huge dent in it, especially the people that have been diamond handing it for 10 years. Yep. And think about that. That's 20, 30% that's going to get ate up. And who's going to have the money to purchase that crypto?
This is just
not me, not us. It's going to be those billionaires and the banks and everybody else that are going to purchase it. So basically, by the way I look at it, and I haven't done extensive research in this, anytime you do this and you drop the price of something, the average person is not buying it up. It's the rich people that they're going to buy it. So you look at the transfer of wealth. I'm not going to get into, I don't want to get political, but it normally happens when there's large, not taxes per se, but a lot of social spending. Because do you own a business that's making money off the government? I don't. Guess who does? The billionaires. Yep. So basically all this money, we're like, we raise the taxes. You're just giving it back to the billionaires. Don't be tricked. And both sides are crazy. And the only people making money is the rich people.
And all this is based upon inflation that's at a record high right now, and food's going up as well as gas, like we just talked about. So,
and the only person who can afford it is Elon Musk.
Yeah. All right. Let's do a pro tip. Today's pro tip is brought to you by OptionsPlayers.com. Now, OptionsPlayers advises you to treat every day like you plan to trade for 30 more years. Not like it's the last day of trading. So that means if you take a loss that you didn't plan, don't sweat it. Take the amount of the loss and divide it out by 10. That's 2 weeks of trading. And add that result to your daily goal. Don't get mentally worn down or even bent out of shape. You'll see it's not a big deal in the whole scheme of things. Okay. We all hate losses though, don't we? Hey, this is the part of the show where we get to hear from you. You can always hit us up on social media at What's Next Wall Street, or email us at WNW@OptionsPlayers.com. There's the socials right there. This first email comes to us from Joan in Miami. Joan asks, is now a good time to make large purchases requiring loans? Great question. Greg, we just talked about inflation.
Good thing we got you here.
Yeah, so inflation is crazy. I just bought a new car. And honestly, my wife and our credit's above 800. And then, so when they came out and I was like, why is that a little bit, why am I paying something over 2%? And then I really thought it's inflation, right? But should you buy stuff? If you can afford it, and when I mean this, I am very much against people just going out and just blowing money they cannot pay back, okay? But if you can afford it, take out all the loans you can. You'll be absolutely.
Honey, get the car. Hey,
now
he said I can
you
have
need to
anything
talk
I
to
want.
a financial advisor to work this out. And the reason why is if inflation is going, let's just say, I think real inflation numbers are 10% or higher, okay? Right. But even if they're 5%, but you're only paying 3% on your loan, that's 2% money you're getting for free if you could throw it into an asset. So that financial advisor can do it. Now, there are some stocks for inflation that do good. Stocks with, that have a lot of cash flow are normally pretty good because they can move that around.
Give me an example.
And then Apple.
Okay.
Okay.
They got a lot
major
of
cash
on their
flow,
books.
so they can invest that cash and do other things and make that money into other assets and build that. As the interest rate goes up to try to bring that inflation down, they'll be able to invest that cash into those higher interest earning things to lower their cost of capital.
So you say go out and, if you can afford it, go buy it. You can't find cars. You can't find houses. What are we going to buy?
Yeah, George has been waiting months for
I've
a
been
car.
waiting months for
What
my
did you
car.
find?
What are we going?
Okay, so I did find cars, and I can about find you any car and you want. Big markups, and I'll give a shout out to them. They'll probably don't care, but I bought a Kia Stinger GT, or a little souped up for my wife, and we got it from a place in Kansas, right outside of Kansas City, Missouri, like Lawrence, Kia, and Mitsubishi. And their price was right at MSRP. They didn't raise the price up. They had it, and everything was there.
Yeah, because their other customer is literally a tumbleweed.
Yeah, no, that place was
Kansas boy.
packed. That place had 20 people in it. I had
Really?
to wait to be seen, and I had an appointment. Not long, but like 10 minutes. And then everywhere else I went, they had their price online. And then when I either got there or, talked to them, they would be like, we got the dealer markup, and the guy there was like, hey, that's the price. We're going to add $4.99. That's our
Documentation.
That's
fee.
our fee to get it to us and all that stuff. And then $2 and then he said $250 for some fees. And I was
you were
like,
like,
250. And he goes $2.50. I was like, why would you even tell me that?
Yeah.
So
It's a coffee fee.
yeah, and they never tried to bump it up. So props to them. It was smooth transaction, and they had a bunch. Now, I found personally that Oklahoma, Kansas area is extremely good at that, and they for some reason have a lot of cars, although they don't have a lot of people.
They got
right?
they got
Okay,
trains
honey.
that go through.
I found
gonna get
Broncos.
to-
I know you were looking
They
for a
got the
new
Hummer
Bronco.
and the Bronco, Oklahoma and Kansas.
The problem with that, though, is that you're working on the chip shortage, so those cars aren't on the floor. So
I'll call you back. Okay.
And
So
you're
Greg
also
got lucky.
talking. I don't know how affected Kia is as the chip shortage.
Careful.
Woo! Some S's and chips in there, right? South Korea, Samsung, everything else, they make all the chips, right?
That's right.
Like I said, they were packed, had a full lot, unlike the
Wow.
BMW that we were taking our BMW to, had like 3 cars out there. That was
Yeah.
it.
Yeah, that's
Even
right.
the
Yeah.
Porsche dealer in Dallas moved
Yeah.
the used cars into the interior showroom because the interior showroom was empty.
Oh, don't try to get a loaner. They're like, we'll see you in 3 months.
Yeah,
Just-
there are no loaners.
Yeah, let your oil run out. Yeah.
Yeah,
All
that's
right.
about
Thanks
it
for
was.
that, Greg. Okay. This next email comes from another Dave F. from upstate New York. Dave asks, when trading options, scaling out seems to be one way to manage positions. Do you recommend this strategy? And if so, how do you set the sell points? Okay. That's another good question, and one that depends on your plan and strategy. Generally, when traders enter a trade with a specific plan, we suggest you follow it to a T. However, if your plan was to incrementally enter a tough situation, then scaling back option is recommended until the trade or movement has been confirmed. Now, you always want to limit your exposure to risk as best you can. You agree with that, Greg?
Yep. If you follow your plan and then you learn from the mistakes from that plan. If you start to adjust that plan too much, you don't really know going forward where you failed or where you're
Did
not.
you say buy a car?
But now if
he
you-
said buy a car. He's still over here saying buy a car, baby.
But now if you made 400% and you're like, oh, this might go down, but but your plan says, hey, I should stay in it, and you just want to limit your risk. Hey, you're up 400%. You can sell a fourth of that, and you got your money back. You can't lose, right?
Got it.
Get the house, pay the house back.
Yeah.
Right, got it. Okay, if you have a question, we can answer it, or maybe Greg will be here and he can, or so we'll find somebody who can. So hit us up on social media at What's Next Wall Street, or email us at WNW@OptionsPlayers.com with your questions.
So, Georgia, the Apple Watch Series 7 started shipping just before this holiday shopping season. And while it did not have any new fitness tracking features like the Model 6 before it had, the key there was blood oxygen level monitoring, plus always on display, sleep tracking, and their already life-saving EKG and heart rate monitoring.
Yes.
The Model 7, however, sports up to a 45 millimeter edge-to-edge display, and all models ship with a much stronger sapphire covering bonded to the OLED that makes its colors more vibrant.
Okay.
Oh, and it too comes with a faster charging through the USB-C cable. Now check out a prior episode to hear me talk about all charging things and why they matter. So Apple has nearly moved everything to the USB port except the iPhone and the 2021 MacBooks, which got a 3rd generation MagSafe connector. If you're looking for a wearable holiday gift, the Apple Watch SE uses older LED display technology and clocks in at $199 with discounts, while the top dog new Series 7 sports an 18-hour runtime, more sensors, and a better display. It also has more case color options, and that one runs you around $400 depending on the size. But where did all this armband fitness stuff originate from? Was it the Fitbit?
Yes.
No.
Oh.
That clipped on your pants. Nike first toyed with their shoe sensor, then moved into a wristband
I
product.
had the shoe sensor.
Right?
Yeah.
That used a special radio in the phone. But the Fuel Band, that I have right here, this was the hottest ticket in 2012.
I think I had that
It cost
too.
$150. It wasn't even waterproof. Now, the Fuel Band clipped on your arm, and it had the ability to measure motion data from walking or jumping, and even showed the time as it counted up motion on your wrist. When you were close to that arbitrary goal and hit a magic number, the fireworks displayed on the LED matrix, just like a digital 4th of July celebration. Next up came the Fitbit, like I have here, and my favorite competitor, the Misfit. So the Misfit...
Was it really called the Misfit, or you just calling it the Misfit?
No, it literally, these two are called the Misfit. Now, Fossil bought up this company and integrated this technology into their arguably prettier watches. Now, the Miro here was an early start to using LEDs on the back to measure your heart rate, as well as the accelerometer motion data. This was an expensive endeavor at the time. But the game changer was an upstart that came from Y Combinator, and it's got its funding from my buddy Steve Draper at DFJ. And these are the Pebble smartwatches. So this is what kicked off the notification wearable market. And they broke Kickstarter with the first model with a $10 million funding round and went on to make 2 million devices. I was in their office the second time they won Kickstarter with a $20 million raise in 2016 for this one right here. It's the Color e-paper watch. And it doesn't have a backlight, but you see if I get the alignment right, you can see the display.
Yeah.
So this lasted a couple days. So funny, they shipped this product and then promptly shut the company down
What the
and
heck?
filed for insolvency. Now, the intellectual property and some employees went over to Fitbit, and a group of hackers got together 2 days after they closed the company down and started rebel.io, REBBLE.io, an opportunity of a community that keeps these things alive to this day.
Crazy.
But back to the future, Apple's getting into Peloton-like services game as well with their Apple Fitness Plus subscriptions, which includes their new feature of iOS 15 called SharePlay. It's essentially FaceTiming your workouts and even Apple TV Plus watching with your friends remotely. Now, it seems just like the types of things we needed a year ago when the pandemic was in full
Yes.
swing, right? If you're one of the 3 million fully insured United Healthcare members in nearly every state, you can enroll for free with Apple Fitness Plus for a
What?
year-long subscription at no cost to you.
I love that.
So let us know what you think about the sharing of your fitness data or workouts over FaceTime below. Do you want to see like people sweating to workouts here?
Hold up. Hey, babe, I need that watch. Yeah, and the Hummer. Okay, Americans are feeling better about the economy. The Consumer Board says its consumer confidence index climbed 4 points last month, and that may not seem like a whole bunch, but that reverses a 3-month downward trend, and that rebound surprised analysts who had expected a decline, right? So that uptick is thanks to consumers purchasing or planning to purchase homes, cars, and major appliances. That's not all. Analysts think this holiday sales season could break records. The National Retail Federation says total sales could be as high as $859 billion. That means growth could top 10%. Now, last year's sales total grew by just over 8%, which is still good, came in at $777.3 billion. So that's all good news, but you got to have stuff to buy, right? So here's the bad news. There's growing concern that this holiday season could be impacted by a perfect storm of increased demand and lack of supply. Nearly every item that makes up a traditional Thanksgiving meal is going to cost you more this year. Market analysts say turkey is on track to break the price per pound record set back in 2015. Oh, and you know how the pandemic led to an increase in snacking and higher demand for junk food and bigger sizes, but I digress.
No.
As we all sat at home eating and eating and eating.
Oh.
Maybe that was just me. Anyway, Kraft, Heinz, and Models, or Modettes, the companies, Mondettes, thank you, who make Kraft mac and cheese, Jell-O, Toblerone, Sour Patch Kids, etc., say there will be a price hike next quarter. And it's not just the soaring price of food. The nation's supply chain is struggling, triggering fears of empty shelves and slow delivery time right ahead of Christmas. So Santa may be dropping GCs down the chimney this year, and that's not Gucci, that's gift cards, Dave. So, I mean, you know, Greg, I got to ask you, Are we going to have stuff to buy? I need that watch. I need that Hummer. I need so much stuff.
I think it's the logistical issue of everything we buy now comes from overseas. The majority of the stuff we buy comes from overseas. So I know the West Coast, everybody's seeing it. It's been on the news. There's some logistical issues there. And then you're in Florida saying, oh, bring it to us. We can do it. Why? I don't know if it's a employee shortage, whatever shortage, truck driver shortage.
It's all the above. They're not keeping the ports open long enough. There's not enough truck drivers. But the ports are LA port went 24 hours. They're doing tents so they can process more material faster. But then the drivers aren't there to pull the containers out. So then the shipping companies are being fined for the containers sitting when they're passed through customs. So
Kanye West was literally fined because he promised a product in 30 days and he couldn't get it to him.
That's because it's in the state of California, if you take money for a product, you have to ship it in 30 days or notify them that will not be shipped in 30 days. That's the California law.
Yeah, I think he wound up paying like $900,000 for stuff. Yeah, crazy, right?
All right. Well, we want to thank lead instructor at Options Players, Greg Krause, for being here with us in the studio today.
Yeah, so remember, if you've got questions, we can try to help you answer them. And we'd love to hear from you. So email us at WNW@OptionsPlayers.com or hit us up on social media at What's Next Wall Street.
And you can, of course, watch all the old episodes of What's Next Wall Street on the Options Players YouTube page. Check out where I talked about charging.
Yes.
And, of course, listen to us on Spotify, Apple, or wherever you get your podcasts. I'm Dave Mathews.
And I'm Georgia Alfredas. See you next time on What's Next Wall Street. And please share our show with a friend. They might make you think you're super smart and you know all this stuff. Right? So smart.